Hello and a very warm welcome to Money Control presents Decoding SM REITs, a new way to invest in real estate. Today's session will focus on an exciting, evolving trend in the real estate investment space, which is small and medium real estate investment trusts, or SM REITs. We will be diving deep into understanding what SM REITs are all about, how they compare with other listed REITs and asset classes, and who these products are best suited for. Additionally, we'll also look into the practical side of it, how one can invest in SM REIT schemes and the factors to consider when choosing the right one. Joining me today, Kunal Moktan, co-founder of Property Share. Let me tell you a little give you a little information about Property Share. Property Share is the investment manager to India's first small and medium REIT. Kunal, it's been quite a journey. SM REITs, of course, the discussion of REITs started in 2010, and then SEBI got into regularizing with a framework in 2014, and now 2022 was a marquee year for you. Tell us a little about the journey of SM REITs as well, via Property Share's journey as well.
Thank you so much for having me. So, interestingly enough, I've actually been part of both the REIT as well as the SM REIT sort of regulations.
Right.
Back in 2010, like you mentioned, I was at Blackstone Real Estate Fund. We had accumulated a lot of assets.
Yes,
and
I remember talking to you back then as well.
We had $2-3 billion of assets, and we didn't know how to exit them. And India didn't have a REIT sort of regulation at the time. So we did kind of go to the regulator and tell them about it, because for us, that was the big way that we could exit our portfolio. And at the same time, it was a very good way for the Indian retail and institutional investment space to get access to a securitized real estate product, which we didn't have, which, you know, I mean, in the US is $1 trillion. So, and that dialogue took a bit of time, and then SEBI, of course, was very receptive. The first regulations came out in 2014, and the very first REIT, which was the Blackstone sponsored REIT, Embassy Office Parks, came out in 2018.
2019, all right.
The second one was also a Blackstone sponsored REIT, Mindspace. The last one, Nexus, was also a Blackstone sponsored REIT. So Blackstone did play a very big role in the whole REIT sort of regulatory space. And then on the SM REIT space, I mean, there are two ways to look at it. One, Property Share pioneered the first fractional ownership platform in the country in 2015, where we said, let's give people access to rent-yielding commercial real estate directly to a slightly sophisticated retail base. So we keep the minimum investment a little higher at 25 lakhs. And this was very successful. People loved the product. They liked being able to choose which asset to buy in which micro market, and who the tenant is, and so on. So it kind of took off. We did quite well. And about a couple of years ago, the regulator came to us and said, look, this is a very good asset class. It is giving access to investors to assets which are less than 500 crores, which is what the REITs are not touching right now. So we want to regulate this asset class. We'd like to come up with some regulations. At that time, we didn't know it'll be SM REITs. We sort of I'm sure they had a lot of discussions on how to do it, but then they came out with a few consultation papers. And then finally, March of this year, they notified the SM REIT regulations. They've introduced an entirely new asset class called SM REITs, small and medium real estate investment trusts. And the way it's different from REITs is REITs are only allowed to list assets which are 500 crores and higher. But there is an entire universe of assets less than 500 crores in the country, which is huge, which CBRE just last week came out with a report saying it's worth $60 billion in the next 2-3 years alone. And they said, let's regulate this product as an SM REIT less than 500 crores. So that's how they came up with this new subclass within the REIT regulations called SM REIT for assets less than 500 crores. And Property Share played a pretty integral part in this, being the first fractional ownership platform, also the largest, because part of what SEBI was also trying to do, like I said, was regulate the FOP sort of business.
It's interesting, the evolution of SM REITs from REITs and Property Share playing such an important role. What was that like, if you can tell me a little more in details? What was that collaboration with the industry like? And also, what were some of the points that you had in mind when this whole market opened up?
So, I mean, if you really get into the process, the nuts and bolts of it, how exactly to structure this product in terms of a special purpose vehicle, what kind of securities, distributions, how you structure the capital structure to the investor, and so on. We did a lot of that work in the 8-10 years that we've been doing it, that's how it sort of the industry evolved, and everybody else sort of kind of followed what we had done, including the minimum ticket size and the structure of the SPV with debentures, so that you have a lesser tax for the ultimate investor, and so on. So that's sort of the process work that we've done for the last 7-8 years, and that's how it evolved into what it is today. So like I said, I think we played a pretty big role in it, but what happens from now on, I mean, the biggest scale is achieved when a product is regulated, and in fintech, which is where we are, regulation is a very, very big advantage. So it can either shut you down, or it can really help you scale. And the regulator in this case has taken a very positive view of the industry, and they've been very consultative. So I feel like we are quite privileged to be regulated by SEBI and what they've done with this particular regulation. So yeah, I mean, I feel like we've come a long way in terms of evolution, but we have a big sort of way to go still.
Yeah, wonderful to hear that. When you say you have a big sort of journey from here as well, one of the things that comes to my mind is also the maturity of the market, and how are people looking at this SM REITs versus other traditional asset classes and REITs itself. So what would be your opinion on that? It's a common question. How do they compare with what is already available in the market?
Yeah. So in terms of the retail investor understanding of this space, it's been quite good because of REITs. We have 4 REITs now listed, and we also have a few InvITs, as well as a warehousing REIT. So from 2018 to 2024, the REIT industry is already worth billions of dollars in India. And therefore, I feel like in terms of investor education, we've done a lot of the work already, because SM REIT is nothing, like I said, but a subclass of REITs. So in that way, it's a way to invest in a real estate asset through a securitized sort of manner. So there I feel a lot of the work has done. What we need to educate people on is how SM REIT differs from, let's say, a REIT, which is a very common sort of question. And the way it differs is, one, the asset size, which I already spoke about. A REIT is 500 crores and more, SM REIT is 500 crores and less, and therefore an SM REIT has fewer assets than a REIT. So REIT might have 6 business parks, worth 50 million square feet, and SM REIT will have maybe 2 or 3 assets, so maybe even one, 100, 200, 300, 400,000 square feet. So I feel that's the big difference. The second big difference between a REIT and an SM REIT is, in a REIT you're buying a basket of securities and a basket of real estate together. It could own an office building in Mumbai or in Bangalore together. Here you get a very single focused asset in the city and micro market of your choice. So let's say it's a building in 1 BKC in BKC. You are from Mumbai, you are familiar with the location, you know the asset is good, quality is good, the tenant is, let's say, a financial services company, and therefore you want to invest in this, but not in the other part of the portfolio in Bangalore. You can't do that in a REIT, but in an SM REIT you get this focused asset investment approach, where you can choose what you want to. So we always say, be the investment committee. You are the guy who decides where you want to sort of invest. So that's the other big difference between a REIT and an SM REIT. Then in terms of returns, the asset classes are the same, but REITs have a proportion of assets in under construction and land as well. They're given up to 20% to invest in land and under construction, which is great, which gives them in the opportunity to grow the NOI. But at the same time, you get no returns from that 20%. You get returns only from the 80%, which is rented. And therefore, it will always have a slightly lower yield compared to a product where 100% is fully leased. So an SM REIT cannot invest in an under construction asset. It's not allowed, or land. It has to invest in rent yielding assets, and therefore the yield is slightly higher than a REIT. In terms of what it provides, it's the same distributions on a quarterly basis as well as capital appreciation. The other big difference is, in a REIT, the REIT already owns the asset and it IPOs the asset. In an SM REIT, you raise capital and buy the asset. So it's almost like an AIF in that case. It's not a blind pool fund where you raise capital and buy 4 assets and you give money to the investment manager. Here, you raise money on the basis of the asset you already show to the investor, saying this is going to be the first asset. But the investment manager has to invest 5% of every REIT that it lists from its own capital. So it kind of provides skin in the game, as they say, of the investment manager, which is a new regulation from SEBI, very similar to AIF. So these are the main differences in REITs and SM REITs. And of course, I mean, we already know the difference between REITs and SM REITs versus government securities and debt funds and equity and so on.
The question that automatically comes in one's mind after this is then who is the right person for whom this opportunity is made for? Primarily because we're also seeing there has to be a certain cap size. Also awareness of the markets, right? Or the place where you are, or a basic awareness of at least the real estate industry as a whole. When you look at the clientele, or when you look at who this product is for, according to you, what is that person?
I mean, look, we've been doing it for now 8-9 years, and you know, we have a fair number of investors on our platform. So I do have a pretty good answer to the question. We have profiled our investors quite extensively over the last few years. And it's mostly suited for working professionals who want to diversify their income away from the traditional sources of capital or investment, which is equity or government securities or debt funds or mutual funds, which is where most of the people invest. This is a slightly alternative investment product. Real estate has always been an alternative investment product, but it's a big part of that alternative universe. And we as Indians, we love owning real estate. We always have. You know, the first thing we do is buy a house, or you know, we want sort of an asset class which gives us continuous cash flows. So it's for people who want to diversify away from traditional asset classes, have access to real estate directly, but not by investing 100 crores or 200 crores of their own capital. By putting in this case, 10 lakhs. SEBI has now reduced the minimum to 10, and they plan to do it kind of make it even lower. Therefore, it's for people who want to buy a piece of an excellent real estate asset, which they like, in different cities, but at a much lower threshold. It could be anyone from their late 20s and 30s to even someone in the 60s, because for a retiree, it makes a lot of sense to get 8-9% returns on their capital from rents on a monthly basis. It's inflation linked, so it's really good. It goes up by 5% every year, so it helps them plan their sort of finances.
How does the taxation look like then in this asset class?
The answer would have been very different 2-3 months ago, but in the latest budget, the finance minister actually made a lot of positive changes for REITs, which therefore percolate down to SM REITs. Up till now, for stocks, it was 1 year, 1 year holding period gave you a long-term capital gains tax, which was only 10%. But for REITs, you still had to hold it for 3 years to qualify for the long-term capital gain 10%. Otherwise, you are short-term and you had to pay the short-term capital gains tax, which is much higher in India. So, but this year they aligned REITs to the normal listed stocks and they made it 1 year, which is a very big positive for the industry. So now if you hold the units of the trust for more than a year, you pay only 10%, or rather 12.5% now on your tax, which is a very, very good, very benign tax structure compared to other products like FDs and so on, where you pay the full 39% if you're in the high tax bracket. And on the yield which you earn, you pretty much pay on the dividends no income tax, and on the interest bit you pay as per your tax slab. And then if it's return of capital, it's a bit technical, but the way the REITs have been doing it is if the rent of a $100 asset is, let's say, $10, then they distribute this 10 as some part of dividend, some interest, and some return of capital. Most of it is return of capital. So on return of capital, there's no tax. On interest, it's your marginal tax rate. On dividend, there is no tax. So overall, the net tax comes to around 5 to 10% of yield, which is again very, very favorable.
How to choose this right SM REIT, and what are some of the things that you need to be careful about? Because that's the next question everybody sort of asks, that, you know, if everything looks nice, what are the things that I should be careful about?
Okay. You know, I mean, the good thing about an SM REIT, like I said, is we present the asset to you. So you get to see exactly where the asset is, the location, the tenant profile, you know, the returns, etc. So therefore, you know, it's much easier for you. But the other things to focus on clearly are, you know, who the manager is, the credentials. SEBI has already done a lot of work around this. They've ensured that there is a minimum net worth of 20 crores of the investment manager, of which 10 crores has to be liquid. They have to have a very technical, they have to be technically qualified in the investment management space. At the same time, you'd be able to invest 5% in every listing. So, how big the team is, whether they have institutional investing experience, all of those things are what sort of matters. And of course, ultimately, it's the asset that you're going to buy, how good that is.
Welcome back. I'm in conversation with Kunal Moktan, co-founder and CEO of Property Share, about SM REITs. SM REITs, or small and medium real estate investment trusts, are investment vehicles that allow individuals to invest in smaller fractional ownership of real estate assets, making property investment more accessible and flexible. And we've been talking about that. Where does Property Share go from here?
We've been doing this
Yes,
for many years, of course. But the great thing, like I was mentioning earlier, is because it's regulated, we can now really, the demand is not really a problem, because now we can go out in the market, we can work with wealth managers, distributors to distribute this product. Up until now, it was sort of in a gray area. It was not fully regulated, and therefore some of the bigger names in the industry were a little apprehensive about marketing this product, but that's all gone now. It's like an IPO, you sort of go out in the market, so demand is not a problem. Therefore, raising capital is not a big issue. And supply in India, like I said, we have lots of office buildings, retail malls, hotels, hospitals, less than 500 crores, which we can buy. So we're planning to list 7 to 8 schemes a year and reach AUMs of about, for the first hurdle, of course, we are already at around 1,500 to 2,000 crores. We want to get to 8,000 crores, which is about $1 billion of AUM, and then sort of grow from there.
Also, I see democratization of getting entry into the real estate market, and not just with the holding a property on paper or the one where you're living in. The whole idea of how you want to own real estate in the country in terms of your investment has changed. Gone are the days when it was looked at as an asset class, which is a solid building standing there in your name. Now first came the funds, and now this. I think that democratization is also happening of the investor, where he's getting to, as per his capacity, can actually invest in something that is taken care of by someone else, and yet they are making money from the market as the real estate industry is also going.
Yeah, absolutely. Look, I mean, if you have only a couple of crores, right, then you'll only get a building worth a couple of crores. And in let's say 1 or 2 crores, you might end up getting a very small office building in a location you don't really want to be in, and the tenant is maybe a small, nothing against them, but a chartered accountancy firm or a law firm, not a multinational like Goldman Sachs or Microsoft or Amazon. And if you want those sort of buildings, you need 200-300 crores, which was the preserve of the family offices and high net worth and ultra high net worth individuals. They've been doing this for long periods of time, owning pieces of outstanding real estate on their own balance sheet, earning the income and the capital appreciation. But now with REITs and real estate funds and also SM REITs, you can own a piece of this asset yourself, but for only 10 lakhs. I think that's the big advantage of democratization of sort of real estate. And for the guy who's been owning this asset 300-400 crores and just sitting there, he suddenly gets 300 crores to do other things. He then goes, buys land, he kind of builds some more real estate. So that is the one that sort of unlocks the value in the economy.
Kunal Moktan, thank you so much for this wonderful interaction and all the insights upwards and onwards from
Thank you
here.
so much. Thanks a lot.
All right, to wrap up today's discussion, we have explored the role of SM REITs in diversifying investment portfolios, especially for those looking to enter the real estate market with a more accessible and flexible approach. And Property Share has clearly been a trailblazer, offering structured opportunities. Well, as SM REITs continue to evolve this, they promise to open up exciting new avenues for wealth creation in India. And this looks like a new road for investment. Thank you for watching.